morning, my blockchain bandits and digital wanderers. Welcome back to another episode of the Blockchain Report, the show where we peel back the layers of the tech onion to reveal just how ridiculous, overhyped, and occasionally brilliant this industry really is. I'm your host, Hank Hudson, broadcasting live from our state-of-the-art, fully rug-proof studio here in sunny San Francisco. Before we dive into today's show, do yourself a favor, hit the like, follow, and subscribe button so that you can follow Roxham TV and Hank at Roxham TV on all platforms, because the future is weird, and trust me, you won't want to miss it. All right, let's dive into this week's absurdity. First up, in the never-ending quest to make everyday objects smarter than you, some overfunded tech startup just dropped Brewnet, an AI-powered coffee maker that doesn't just make your coffee, it decides how much caffeine you deserve. Yep, this thing syncs to your sleep data, work schedule, and because Silicon Valley can't help itself, your social media posts. So if you had a little late-night existential spiral on Twitter, Elon, Kanye, I'm looking at you two, then congratulations, you're getting decaf this morning. It's like having a barista who not only judges you, but has the data to back it up. Next thing you know, your smart fridge will be locking up the ice cream until you hit your 10,000 steps of the day, which actually is not the worst idea I've ever heard. But nonetheless, the future is looking bright, folks, and by bright, I mean deeply, deeply invasive. Meanwhile, in the never-ending fever dream that is the crypto market, we now have Catcoin, meow, because apparently investing in actual companies is just so 2023. Now, this token claims to be securing the financial future of cat memes, whatever that means, I don't know, which honestly sounds more stable than most hedge funds right now. The founders insist that while gold has been a trusted store of value for millennia, a well-groomed tabby has a better long-term potential. Meow. Now, their mascot, CryptoKitty, allegedly has a better read on market trends than most Wall Street analysts. And let's be honest, he probably does. But if your retirement plan includes a roadmap filled with nothing but catnip and community vibes, you might want to start looking into a 401k or something. Just a thought. And finally, because the metaverse is still desperately trying to prove its relevance, some geniuses decided that what we really needed was the Versaverse, a VR world where you can live the glamorous life of a 16th century poet. I gave it a shot, thinking I'd finally master the art of the sonnet, but instead, I spent an hour rhyming love with dove, and while trying to impress a virtual Shakespeare who frankly looked pretty disappointed with me. No surprise there. But the real kicker is the game comes with a realistic historical hygiene settings. So now, not only am I a terrible poet, but I also have to deal with virtual BO. It's immersive, it's educational, it's entirely unnecessary. And that, my friends, is the world we currently live in. Speaking of that world, boy did it deliver today, as we have a wild show for you. What's up next? Well, we got our Trump alert. Did Donald Trump just endorse Ripple XRP? I don't know. You'll have to stay tuned to find out. We have the Libra Meme Coin fiasco, destroying over $250 million worth in investor wealth. We got an update for that coming to you soon. And Bitcoin's recent price rise and why it's important. All coming to you later. But first, today's market rundown. Oh, the financial markets, boys and girls, where logic takes a backseat and chaos reigns supreme. Let's dive into today's roller coaster, shall we? First up, Bitcoin having a nice little surge as of late, sitting at around 97,000 bucks, up a modest percentage point in the last 24. But why is that? Well, because apparently the mere whisper of AI integration sends traders into an absolute feeding frenzy, as if Skynet's endorsement is all we needed anyway. Next up, we have Ethereum trading at around $2,700. A bit of an uptick on the day. What's the reason, though, is investors are giddy over potential AI advancements, as if robots are about to start mining NFTs or something. It's possible. XRP is sitting around 269 a coin, up about a couple percentage points today. Speculation about AI integration has traders abuzz because who wouldn't trust a robot with their money, right? They can't lie to you, or can they? BNB is sitting around 650, a slight dip. Perhaps investors are just taking a breather, or maybe they're just bored. Who really knows? Cardano sitting at about 78 cents a coin, up a little bit on the day. The cause? Probably more of this AI integration hype, because nothing says buy like the promise of sentient blockchains. In the stock market shenanigans for the day, we have the S&P down a little bit under 1%. Investors are a bit jittery over potential tariffs and inflation, as if these are new concepts or something, but they're freaking them out. The Dow Jones is about a percentage decline. Blame it on trade tensions and the latest political soap opera we're seeing over in Washington. NASDAQ's down a percentage point. Tech stocks are feeling the heat from the inflation fears because apparently money isn't as cheap as it used to be. Tesla's cruising, but at about 350, down a few percentage points. Concerns over supply chain issues and the CEO's latest tweet storm have investors hitting the brakes. It's more of the same from Tesla. MicroStrategy, now known as Strategy, is at about 320 a share, up a meager 0.2 percentage points. Their relentless Bitcoin hoarding continues to be a roller coaster for shareholders, but as we saw in yesterday's show, even mom and pops around the globe are starting to get involved. And Nvidia, priced at about $137, down about 1.5%. Despite being the darling of AI enthusiasts everywhere, even they aren't immune to the market mood swings. In summary, today's market is a delightful mix of AI dreams and geopolitical nightmares. But buckle up, it's probably going to be a bumpy ride in the foreseeable future.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back. It's time for today's bull run, where we go over the top stories of the day. We got a lot to cover, so let's get into it. The SEC has once again decided that what crypto really needs isn't clarity, but another fancy-sounding enforcement division. Enter the Cyber and Emerging Technologies Unit, also known as C2, because Crypto Assets and Cyber Unit just wasn't vague enough, apparently. Led by Laura D. Allard, C2 is the agency's latest attempt to protect retail investors from the terrifying frontier of emerging tech. That means scams involving AI, social media, and the dark web, blockchain fraud, and whatever new Ponzi scheme your uncle just discovered on Telegram. Now, before you get too excited, nope, this does not mean the SEC is suddenly pro-crypto. They didn't replace the old crypto unit because they like us now. They just needed a broader net to catch all the bad innovation out there. Now, what's their key focus? AI-driven fraud, because nothing says innovation like getting scammed by an algorithm. Social media scams, so Elon, make sure you stay safe out there, buddy. Dark web schemes, yes, the SEC is now lurking in the same corners of the internet as your high school's edgiest hacker, and retail brokerage account takeovers, because it's not just your grandma's Facebook that gets hacked anymore. Oh, and don't forget fraudulent disclosures by public companies about cybersecurity incidents, which in translation means if a company gets hacked but pretends everything is fine, C2 is definitely coming for them. Acting SEC Chairman Mark Uyeda claims that this is all about protecting investors and encouraging innovation, which, coming from the SEC, is like a mall cop saying they're here to promote free movement while frisking teenagers. So what does this mean for crypto exactly? Probably more regulation, definitely more lawsuits, and absolutely zero answers on what counts as a security. But hey, at least now we have a new acronym to keep track of, right? Can't wait. Well. Bitcoin has decided to take a breather from its usual roller coaster ride, and we don't know whether to be relieved or deeply, deeply suspicious. As of Thursday, Bitcoin is sitting at a comfortable 97K, up about a percentage point on the day. Sure, it's down 7% this month, but it's also up a casual 86% over the past year. So let's not pretend anyone's suffering here, unless, of course, you bought at the absolute top, in which case, you have my thoughts and prayers. Now, here's the real shocker. Bitcoin, the beloved chaos engine of finance, has been kind of stable as of late. I mean, yeah, for the past 2 weeks, it's been bouncing between 94 and 100K, showing all the excitement of a suburban dad's fantasy football league. According to analysts, this is a phase of the market consolidation and uncertainty, which is kind of a fancy way of saying nobody has any idea as to what is coming next. Now, what's causing this kind of eerie calm right now? Macroeconomic concerns, the Federal Reserve playing mind games with interest rates, and the fact that Bitcoin is now shadowing the stock market like an over-enthusiastic intern. Man, I wish we had one of those. Now, the S&P 500 and Bitcoin are both up about 4% in 2025, meaning your favorite crypto is now just a slightly more chaotic index fund. Some blame Trump's re-election and his sort of, but not really pro-crypto stance. Others say investors are just staring at global events, waiting to panic. Either way, the lack of volatility is either the best thing to ever happen or a sign that Bitcoin is about to explode in some direction. Your guess is probably as good as mine. And stop me if you've heard this one before. A new meme coin explodes in value overnight, everyone rushes in, and a handful of insiders make millions while the rest of the investors get absolutely wrecked. This time, the victim was Libra, a Solana-based meme coin that went from the next big thing to absolute dumpster fire in record time. The numbers are grim. $251 million in investor wealth gone. Like, poof, magic trick gone. Just 14% of the traders made money in this, while 86% got rugged harder than a shag carpet in the 1970s. Now, the fun started when Argentinian President Javier Milei tweeted about Libra, suggesting that it would help fund small businesses and grow the Argentine economy. Naturally, the crypto degens took this as a divine sign and pumped the token's market cap to $4.5 billion in a matter of hours. Because why not? Then came the inevitable plot twist. Massive insider sell-offs that cratered the price by 90%, turning this into one of the most efficient wealth destruction events in meme coin history, which frankly is saying a lot. The president, now realizing he had basically retweeted a financial grenade, deleted this post and claimed he had no idea what he was endorsing. Whoops! Meanwhile, Argentina's opposition is calling the whole thing an international embarrassment and threatening to impeach Milei. Yeah, you heard that right. A meme coin scandal might get a sitting president kicked out of office. Crypto, man, it never seems to disappoint. And if you needed a reminder that meme coins are just casinos with the extra steps, here it is. Also, if a politician ever tweets about a coin, don't just walk away, run. Doge enthusiasts, it's time for another episode of Will This Meme Coin Survive? According to analysts, Dogecoin is hanging on by a thread, and if it drops below a key support level, we might have to finally retire the to the moon jokes. So here's where we're at. Doge has been moving sideways for about the last 10 days, failing to break past 34 cents after its last big sell-off. It's now hovering at 25 cents, staring nervously at its make-or-break support level at about 22 cents a pop. A threshold so important it might as well have a flashing neon light around it. Now, if it holds, the bullish case remains intact and Doge believers can keep their fingers crossed for a potential breakout past 34 cents, which would signal a real rally. But if it falls below 22 cents, well, things might get ugly. And if it somehow drops under 20 cents, even the most dedicated Doge evangelists might start reconsidering their life choices, like that one guy that made $3 million and then just stuck around and now he's probably lost most of it. Hurts, bro. Now, to make things more fun, the analyst behind this warning is using the Elliott wave theory, which is basically astrology for traders. According to this method, Dogecoin might be in the middle of a classic ABC correction pattern, which means that a final painful dip could be coming before it actually decides to bounce back. Or, it could just crash and burn. Who knows? But for now, Dogecoin is holding quite well compared to some other cryptos, Solana, because, macroeconomic factors will end up deciding its fate. So if you're still holding Doge, you might want to strap in. It's either going to explode upwards or get sent back to the shadow realm. Stay tuned as we'll be keeping you updated on that one. And talking about the shadow realm, OpenSea, the NFT marketplace that somehow keeps finding new ways to enrage its users, This time, it's teasing the launch of its very own token, C. And if the response so far is any indication, this might be the most frustrating free money event in recent history. OpenSea revealed that C will be available to US users and that airdrop eligibility will factor in its historical activity, not just recent trades. The last part is an attempt to calm down the furious collectors who felt their OG status meant absolutely nothing under the previous points system. But instead of fixing the issue, OpenSea managed to make things worse. The XP system it introduced turned out to be a paradise for wash traders and a headache for everyone else, leading to a wave of backlash. Artists felt sidelined, actual NFT collectors were drowned out, and OpenSea, realizing it had accidentally incentivized market manipulation, hit pause on XP rewards for listing and bidding. In response, OpenSea has shifted to a mysterious new XP shipments system, which, because when your community is already furious, the best move to make things even more confusing seems to be the way to go. Meanwhile, blockchain gaming is thriving with 386% year-over-year rise in active wallets. So while NFTs seem to be stuck in the figure it out as we go phase, Web3 gaming is proving that people will gladly gamble away digital swords and space rocks as long as it's wrapped in a game. So, is OpenSea's C token a bullish signal? Well, that depends on whether they can convince users that the platform isn't just a sophisticated way to lose money on pixelated penguins. We'll see. Nonetheless, Ethereum developers are on a mission to make crypto more user-friendly. And their latest solution is something called the Open Intense Framework. Let's get into it, because it sounds promising until you realize that intense is just another way of saying, trust me, bro, the blockchain will figure it out. So instead of users manually inputting gas fees, transaction paths, and contract approvals, Intense allows them to simply express what they want to do, like swapping 1 ETH for the best price on another chain, while a third party executes the transaction for them. On paper, it sounds great. In practice, it means handing over more control to intermediaries, which raises the obvious question. Aren't we all here because we wanted fewer middlemen? Ethereum developers insist that this is the future, arguing that simplifying transactions is necessary as blockchain activity spreads across multiple Layer 2 networks. Now, the Open Intense Framework aims to create standardized execution rules so that intent-based transactions don't feel like playing 4D chess blindfolded. Yikes. But the current problem is that no one can agree on what to call the people making these transactions happen. Some call them solvers, others call them relayers or filers or fillers, and at this point we might as well just admit that we have reinvented PayPal, but with a bunch of extra steps. So, is Ethereum's new framework bullish? If you like the idea of telling the blockchain, just do it for me, then sure. But if you're the kind of person who still manually sets your gas fees like an old school crypto purist, this probably feels like another step toward making crypto as centralized as the banks that we were supposed to be replacing. Coinbase has officially pleaded with Congress to bring some much needed clarity to crypto regulation. And by clarity, they mean rules that don't completely ruin their own business models. In a blog post, Coinbase called for the following: a clear legal definition of digital assets, distinguishing between securities, commodities, and things that just exist to pump and dump. Authority for the CFTC to oversee the crypto spot market, because after years of SEC lawsuits, they'd like to deal with literally any other regulator. A framework for stablecoins to prevent more disasters like Terra, and hopefully put Tether under enough pressure to finally admit what's actually backing its reserves. Lawmakers, for their part, are slowly inching forward on stablecoin legislation. A couple of Republican-led bills are already in discussion, aiming to create clear rules for stablecoin issuers at both the federal and state levels. Meanwhile, Democrats have introduced their own bill, which includes steep fines and jail time for unregistered users. So the big question is, will Congress actually move fast enough to pass these regulations before another crypto catastrophe forces their hand? For now, Coinbase will have to keep playing the waiting game while hoping the SEC doesn't suddenly remember that it hasn't sued them for anything new this week. Whew, that was a lot. All right, gang. All right, folks, it's time for a Trump Alert, the segment where we keep tabs on the 47th president's latest moves, because whether you love him, hate him, or just enjoy watching the chaos, you can't ignore him. So, did Trump just endorse Ripple XRP, or did he just hit repost on Truth Social between bites of a well-done steak? He strikes me as that kind of guy. Let's go over it. The setup. First, crypto enthusiasts have been buzzing ever since Trump shared 2 articles about Ripple US expansion on Truth Social. That's right, the same platform where political rants and all caps truth bombs go to thrive. Naturally, the XRP crowd took this as a sign from the heavens that Ripple is about to moon. To be fair, Trump hasn't been much friendlier to crypto since reclaiming the White House. His January 23rd executive order actually encourages digital assets and blockchain tech across the economy while slamming the door shut on the idea of a central bank digital currency, or CBDC. No digital dollars, no Fed-controlled funny money, just pure, unregulated free market magic, baby. And apparently, Ripple got the memo. Since Trump's election, CEO Brad Garlinghouse says 75% of Ripple's job openings are now in the United States. A huge reversal after the company spent years looking for friendlier pastures overseas. Now, Ripple has been cutting deals left and right in the States, and suddenly, Trump is posting about them. Coincidence? Maybe. Strategic? Definitely. Now, there was a dinner that started this whole thing, because it turns out Trump and Garlinghouse have already sat down for a very important, very Mar-a-Lago meeting, because let's be honest, if Trump is going to talk crypto, it's probably happening somewhere with gold-plated everything and a dress code that almost definitely allows golf polos. He loves those things. Now, the dinner led to even juicier rumors. Garlinghouse is now a leading contender for Trump's new cryptocurrency advisory council. This council, we're told, will be helping shape Trump's regulatory approach to crypto, because nothing says sound policy like assembling a group of blockchain billionaires and just seeing what happens. Oh, and let's not forget David Sachs, the venture capitalist and PayPal Mafia alum, who Trump just tapped as his crypto and AI czar. Yeah, czar, because that's what we're doing now. If Garlinghouse joins the club, we might be looking at the most pro-crypto White House in history, or at the very least, the most entertaining one. So what's the verdict? Did Trump just pump XRP? Well, depends on who you ask. Some XRP holders were waiting for liftoff, assuming that a single Truth Social post would send the token into orbit. But reality set in pretty fast, and prices didn't go parabolic, and one user, XRP Crypto Wolf, called the market irrational for not immediately rocketing to the moon. See, that's the thing about crypto, though. 1 minute, a tweet sends prices soaring, and the next, the market shrugs and asks for more. Trump talking about Ripple should be bullish, but crypto traders, they tend to be a little fickle. So what's the big picture here? At the end of the day, Trump is playing the long game with crypto, and Ripple is playing the proximity game with Trump. Whether or not he meant to endorse XRP, this does tell us one thing. Crypto has officially become a political power play. And Trump, well, he's making sure that play happens on his turf, one Truth Social post at a time. Stay tuned, though, because if history tells us anything, this won't be the last time Trump moves the crypto markets with his thumbs. Have you been hit with an SEC lawsuit? Are you a crypto firm just trying to do your own thing without getting a legal smackdown? Well, folks, it looks like help is finally on the way, courtesy of one Donald J. Trump and regulatory pause buttons the SEC suddenly discovered. Whew. That's right, gang. The SEC, the same agency that spent the last few years throwing lawsuits at crypto firms like they were teeing off at a driving range, is now suddenly taking a beat. But here's the kicker. They're only hitting pause on cases with imminent deadlines. Yeah, sounds totally above board, right? According to Fox Business reporter Eleanor Terrett, the SEC hasn't yet paused its lawsuits against Ripple and Kraken, but not because they don't want to. It's just that the deadlines for those cases aren't knocking on their door just yet. Ripple's next court showdown isn't until April 16th, Kraken, March 31st. Meanwhile, Coinbase and Binance get to sit tight until March 14th and April 14th. So what does this all mean? Well, word on the legal street is that the SEC is just biding its time until Trump's picks for the SEC chair, Paul Atkins, gets confirmed. And Atkins, well, let's just say he's no Gary Gensler. Atkins is known for being a free market guy, which means crypto firms may finally have a shot at running their own businesses without waking up to another "you're being sued" notification from the SEC. Now let's talk about the whiplash that is U.S. crypto regulation. Biden's SEC spent years handing out lawsuits like party favors, over 100 cases against crypto firms for allegedly violating securities laws. Trump's SEC? They're out here trying to turn the U.S. into the crypto capital of the world, which is great news for the industry as a whole, but probably a complete nightmare for the SEC lawyers who thought they had job security for the next decade. Kraken's already taking advantage of the friendlier climate, reinstating staking services in the U.S. just 10 days after Trump took office. And if this pause on lawsuits turn into an outright retreat, well, that could mean that Ripple finally gets out of legal purgatory and Coinbase and Binance breathe a little bit easier, which, for the record, is probably the first time in a while that anything has made Brian Armstrong relax. But before we start planning the victory parade, let's not forget a couple of things. First, the lawsuits aren't gone, they're just on ice for now. Regulatory uncertainty still very much exists, and Trump's SEC still has to, make the rules. But hey, if you're in crypto, this is probably the best legal news you've had in a while. So if you're an exchange CEO and you haven't lawyered up yet, maybe, just maybe, you can hold off on that retainer for now. Because when it comes to crypto regulation, one thing is for sure, the rules aren't always subject to change. The rules are always subject to change. And if the SEC has taught us anything, it's that they'll enforce them whenever is most convenient.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back. Now it's time for Blockchain Without Borders, where we go over the crypto and AI news and Web3 stuff from all over the world, because things happen there too, not just here in the good old US of A. First up, Tether, the stablecoin giant with a seemingly bottomless wallet, is back on its shopping spree, this time eyeing a 51% stake in South American agribusiness firm Adacrigo. Now, because when you've already got billions in crypto, US treasuries, and a football club, why not throw some farmland into the mix? The Chinese do it. Now, Adacrigo, which operates in Argentina, Brazil, and Uruguay, confirmed that it received Tether's unsolicited, non-binding proposal to buy up the majority of its outstanding shares at $12.41 a pop. Translation, Tether slid into Adacrigo's DMs with a big pile of cash and a casual, "Hey, you up?" Now, the company's board is now pretending to think it over while consulting lawyers and financial advisors. Because apparently, selling your business to a crypto empire requires some due diligence. Now, this latest acquisition attempt follows Tether's recent purchase of a stake in Italian football club Juventus, proving that the company is committed to a highly diversified portfolio of assets that have absolutely nothing to do with stablecoins. The timing is also a bit interesting, coming right after Tether clapped back at JP Morgan analysts for suggesting it might need to dump some of its Bitcoin holdings to companies with to comply with US regulations. Clearly, the message here is, we're not selling. If anything, we're buying everything in sight. Tether first dipped its toes into Adacrigo last September with a $100 million investment for a 9.8% stake. And now it's looking to go all in, baby. Meanwhile, Adagrago's stock hasn't exactly been thriving, as it's down 13% since that initial purchase. But hey, no worries, because Tether's spokesperson assures us that this is all part of their broader strategy of diversifying investments beyond digital assets into tangible, long-term value sectors. Or in simpler terms, hedging their bets in case the crypto world catches on fire. According to Tether, farmland is a safe haven during geopolitical uncertainty. That's right, forget Bitcoin. The real inflation hedge is apparently cows and soybeans. But don't worry, this massive investment has nothing to do with Tether's stablecoin reserves. Nope, it's just part of their grand plan to sprinkle their billions across fintech, AI, biotech, and now agriculture. At this rate, it wouldn't be surprising if Tether's next move is buying a telecom company, a space program, and a chain of luxury hotels. But stay tuned, because if there's one thing Tether isn't doing, it's sitting on the sidelines. And in a plot twist that could make even the most seasoned crypto enthusiast do a double take, Nigeria has decided to take on the behemoth of the crypto world, Binance. The charge, a whopping $81.5 billion in alleged economic losses and back taxes. Yeah, you read that right. That's a billion with a B. So what's the backstory here? Well, Binance, the world's largest cryptocurrency exchange, has been operating in the shadows of Nigeria's financial landscape for years. Despite its global dominance, the Nigerian government claims that Binance has been playing a high-stakes game of hide and seek, which involves sidestepping regulations and, more importantly, the tax man. Now, Nigeria is saying, game over to that, bruh. The allegations? Well, according to the lawsuit, Binance's operations have not only been unauthorized, but have also inflicted significant economic harm on the country. The government alleges that by providing a platform for unregulated crypto transactions, Binance has facilitated capital flight, undermined the Naira? I gotta check that one. And deprived Nigeria of a much-needed tax revenue stream. Now, in essence, they're accusing Binance of being the financial equivalent of a party crasher who didn't just drink all the punch, but also walked off with all the silverware. Binance's track record? Well, this isn't just their first tango with regulators. The exchange has a history of skirting close to the edge of financial laws worldwide. In April of 2024, Binance's founder, Changpeng Zhao, was sentenced to 4 months for money laundering, a slap on the wrist that barely made a dent in the company's operations. Later that same year, in November, Binance admitted to money laundering charges and agreed to pay over $4 billion in fines. One would think that such a hefty penalty would serve as a wake-up call, but Binance seems to have hit the snooze button on that one. Now, Nigeria's relationship with cryptocurrency has been, to put it mildly, complicated. In June of 2023, Nigerian Securities and Exchange Commission declared Binance's operations illegal, stating that the exchange was not registered to operate in the country. Fast forward to February of 2024, and 2 Binance executives found themselves detained on allegations of illegal operations and forex manipulation. One even managed to escape custody, adding a dash of drama to the ongoing saga. Now, what's the bigger picture here? Well, this lawsuit isn't just about recouping lost taxes, it's a bold statement from Nigeria, signaling its intent to rein in the Wild West of unregulated crypto operations. As digital currencies continue to gain traction, governments worldwide are grappling with how to regulate them. Now, Nigeria's legal offensive against Binance could set a bit of a precedent, potentially emboldening other nations to take similar actions. So, what's next in this? Well, for Binance, this lawsuit is yet another addition to its growing list of legal headaches. How the exchange will navigate this latest storm remains to be seen. As for Nigeria, the outcome of this case could redefine its financial landscape, determining whether it's ready to embrace the crypto revolution or slam the brakes on it. In the ever-evolving world of cryptocurrency, one thing though is for certain: there's never a dull moment. So grab your popcorn, folks. This showdown between Nigeria and Binance promises to be a blockbuster. Ooh, over to Australia, mate, home of the koalas, Vegemite, and now an absolute blitzkrieg on the crypto exchanges and money remitters. The Australian Transaction Reports and Analysis Center, or AUSTRAC, because, nothing screams efficiency like a government acronym, has decided that some folks in the crypto space just aren't trustworthy enough to handle money. And to be fair, Austrac might actually have a point there. 6 providers had their registrations denied because their key personnel were either convicted, prosecuted, or charged with serious offenses. Which I guess isn't that surprising, considering that Australia was originally established as a British penal colony. And, not for like jaywalking or anything. We're talking about stuff that reflected adversely on their honesty or integrity, which is regulatory speak for these guys were probably running a money laundering side hustle out of their mom's basement. But Austrac didn't just stop at 6 companies. Nope, they went full regulatory apocalypse, sending over 50 warning letters to other crypto exchanges and remittance services. So basically, the government equivalent of saying, we're not mad, we're just disappointed. Heard that one before. Also, you might be in some serious legal trouble, guys. And then there's the best part. Australia has over 1,453 Bitcoin ATMs, making it the 3rd largest hub for Bitcoin ATMs in the world. So let's get this straight. The government is cracking down on crypto exchanges for potentially mishandling money, while at the same time, crypto ATMs are popping up faster than frisk kangaroos in the outback. Frisky kangaroos, like rabbits out there. It all makes perfect sense though, right? In the background of all of this, the Australian Securities and Investments Commission, ASIC, is also proposing stricter rules, potentially classifying crypto assets as financial products, which means firms dealing in digital assets would need a license. Now, call me crazy, but if Australia is looking at licensing crypto businesses while simultaneously banning half of them, what exactly is the end goal here? Is it, I don't know, full compliance or total extinction? You tell me. And if that wasn't enough regulatory whiplash, Australia has also removed 2 collapsed exchanges, FTX Express and ZipMax Australia, from the digital currency exchange register. So basically, the government's solution to failed exchanges is just to delete their names from the system, like a bad breakup where you erase your ex's number and pretend they never existed. Been there, done that. Moral of the story, if you're in the crypto business in Australia, maybe consider moving to a country where the regulators haven't started acting like they're in an episode of Border Patrol, Crypto Edition. Moving on to South Korea, where authorities have taken a firm stance against the Chinese AI chatbot DeepSeek because nothing says data security like handing over all of your personal info to an artificial intelligence built by a foreign power. Now, DeepSeek's rise was nothing short of meteoric. In just a week, it shot to the top of the South Korea's app stores with over 1 million weekly users, which, to be fair, is probably the most impressive thing to happen in AI since ChatGPT convinced a bunch of tech bros that it was a sentient life form. But then people started asking some inconvenient questions. Questions like, hey, where exactly is all of our data going? And wait, why does the privacy policy read kind of like a ransom note? The government's response, oh yeah, sorry about that, guys. So now DeepSeek has been officially removed from the Apple's App Store and Google Play in South Korea. But here's the kicker. If you already downloaded it, you can keep using it. Because obviously, if an AI chatbot is a national security threat, the best course of action is to just let people keep it indefinitely. Makes total sense. Now, South Korea isn't alone in this paranoia either. Taiwan and Australia have also banned DeepSeek from government devices, while Italy, ever the trendsetter in questionable regulatory decisions, has temporarily removed it from its marketplace entirely. And now the US seems to be getting in on the action. Lawmakers are scrambling to introduce a bill that would ban DeepSeek from federal devices because nothing unites the American government quite like banning technology that they don't fully understand. Meanwhile, Texas, Virginia, and New York have already preemptively banned the chatbot from state employee devices, proving that sometimes the US states can actually agree on something. But here's what really has people sweating. DeepSeek reportedly has reasoning capabilities on par with US-developed AI models, but runs on a small fraction of the computing power. So in other words, it's doing what OpenAI and Google have spent billions trying to perfect, except for like way, way cheaper. And that, dear viewers, is why lawmakers are really nervous. And they should be, because at the end of the day, this isn't just about privacy. It's about the possibility that China might be out-innovating Silicon Valley at its own game. And if there's one thing that American tech giants hate more than government regulation, it's competition that doesn't involve burning billions of dollars in R&D. And finally, back in Italy, the land of pasta, Vespas, and apparently crypto regulatory soul-searching, the Bank of Italy and securities watchdog Consap are currently engaging with crypto service providers, which is a fancy way of saying we have no idea what's going on. So let's just talk to these people before we ban everything. Bank of Italy Governor Fabio Panetta, who may or may not be the Italian version of Gary Gensler, gave a speech warning that crypto operators might take advantage of regulatory differences between the US and Europe to wreak havoc on the financial system, which honestly sounds like a plotline straight out of a James Bond movie starring a rogue DeFi developer. His biggest concern? That without strict regulations, tech giants could swoop in and start issuing their own digital tokens, effectively replacing banks as we know them. Now let's be real. If Apple suddenly launched Apple Coin and let you pay for everything in iMessage with a tap, how fast would people stop using their traditional bank accounts? Exactly. Which is why Panetta is calling for global regulations to prevent that exact scenario. The only problem? The rest of the world is still stuck in crypto regulatory purgatory, where a half of the government wants to ban the digital assets outright, and the other half are too busy trying to figure out how they can tax them without looking like hypocrites. So yeah, Italy is worried about crypto taking over banks, Australia is busy nuking exchanges, and South Korea is having an existential crisis over AI chatbots. So what's today's lesson? Governments hate losing control, AI chatbots are definitely watching us, and Australia really needs to figure out if it wants to ban crypto or just make it really inconvenient. And finally, in a recent cybersecurity breach, because this segment just keeps on going, hackers took control of Saudi Law Conference's official account on X, formerly known as Twitter. We got to figure out a better way to say that, guys. Now, they impersonated the Crown Prince of Mohammed bin Salman to promote fraudulent cryptocurrencies, including the so-called official Saudi Arabia meme coin and the Falcon meme coin. The unauthorized posts featured the Crown Prince's name and image, along with the contract addresses to lend an air of legitimacy to these fake tokens. The Saudi Law Conference swiftly regained control of their account and issued a statement disavowing the fraudulent activity. Now, the Saudi government also condemned the incident, emphasizing that no official endorsement of any cryptocurrency had been made. Now, this event highlights the increasing sophistication of cyber criminals in the crypto space as they exploit high-profile figures to deceive investors worldwide. It serves as a stark reminder for individuals to exercise caution and conduct through due diligence before engaging in cryptocurrency investments. And in a related incident, of course, Argentine President Javier Milei is facing impeachment calls after promoting a cryptocurrency called Libra, which experienced a dramatic rise and subsequent collapse, leading to significant investor losses. The situation underscores the potential risks associated with high-profile endorsements in the very volatile crypto market. Welcome back, gang, to our next segment, a little thing we call Audience Buzz. This is an opportunity for me, your host, Hank, to feel close to you, our lovely and appreciated viewers, each and every day, as we take your questions and comments from X, Twitter, whatever, and we talk about them live on air because, guys, I care what you think, and I want you to know that. You mean a lot to me. So let's go over our questions today. Our first one is from Brad in Miami. Brad says, Hank, OpenAI is dropping its C token, but given how NFT airdrops normally go, should I be excited or just mentally prepare myself for disappointment? Brad, that's a great question. I think we've seen over just the last calendar year, or specifically the last 2 months, this meme coin airdrop stuff is out of control. Now, OpenSea has been a very legitimate part of the crypto ecosystem for some time. Certainly has experienced its shares of ups and downs since being the hottest girl on the block during the NFT craze to now not being so much. I personally feel like this is a bit of a play to get themselves back in the spotlight doing something new. Again, everything I say is not financial advice. It is my own personal opinion that I'm happy to share with you guys and girls. But for right now, I would remain skeptical of what any kind of meme or any kind of tokens that are being dropped out of the thin air. We just saw what happened with Libra, and there's plenty of others getting developed like that every day on a smaller scale. So right now, I would prepare yourself for disappointment, probably take a seat on the sidelines, see how things play out, and then go from there. Let's not try to jump into anything hoping to make a quick buck. That's just usually a strategy for utter disaster, as we have seen time and time again. So thanks for the question, Brad. Our next one is from Leeson from Austin, Texas. Lisa says, Hank, if AI keeps getting smarter, when do you think we'll get an AI influencer that's more famous than any human? And as a follow-up, will it be a crypto bro? Oh God, I hope not. That is definitely on the horizon. I even was messing around with Instagram recently, and you can kind of create your own AI chatbots there. But I do wonder, there is something to be said for the human experience and identifying with another human and their point of views, whether you agree with them or disagree with them. And I just don't know if we're capable with AI yet to get ourselves to a place where I'm going to actually start tuning in to see what one of our robot overlords has to say. Will it get more famous? I bet it will get very famous very quickly, whoever the first one is, right? Because it will be the first one, and people will be abuzz because people love the new tech coming out, especially in the wild world of AI, Web3, etc. So, I think that probably will happen, but, you're not going to replace some of these big influencers are out there. Like we had Lima out here a couple of weeks ago, and thank God for real people doing real cool things like him. We certainly appreciate it. So I'm really hoping this isn't anytime soon, but I'm definitely a never say never kind of guy. So we're all going to have to sit back and watch. And for the love of humanity, I really hope it's not like an AI crypto bro. I don't think my constitution can handle that. All right, next one. We got one from Danny, and from my hometown of Chicago. Danny asks, Hank, Ethereum's intent-based transactions sound like a fancy way of saying, trust us, bro, we got this. Should I feel comforted or just assume that I'm about to get rugged in a more efficient way? Danny, bro, I wish I had a better answer for you, my man, but your guess is as good as mine. Based on our reports, and we talked about it earlier today, this just sounds like we're trying to add a middleman to the cryptoverse when that was kind of the whole point to begin with, was to get rid of them and make it person-to-person transactions. So right now, I don't feel particularly comforted by all this. But with that being said, there are new innovations coming out in the crypto and blockchain space every day that are meant to make our experiences in these spaces better. We've had people on the show like Sean Bill from Blockstream talking about what they're doing, especially within the Bitcoin community. So I am excited to see a lot of what these new types of technologies will do. And that includes, to an extent, this intent-based transactions. But like I always say, and I try to preach patience, watch and wait. Don't ape into anything right off the jump thinking that it's the next big thing or you'll miss out. Take your time, do your due diligence, and then go from there. So as always, I'm preaching patience on this one. Next up, we have one from Tina in Brooklyn. Tina says, well, this is a wild one. She says, okay. She says, Hank, if aliens landed tomorrow and saw our obsession with meme coins like Doge and Catcoin that was mentioned earlier in the show, do you think they'd be impressed by our financial ingenuity or just turn around and leave? That's a fun question, Tina, because I do often wonder about the whole alien thing. And if they come here, it's probably not for a good reason, because I already think they're here. And there's probably a very good reason that they haven't actually made a real point of contact with us that we know about yet, right? So I'm hoping that they would see it and be like, well, these cats are crazy. They've got dog shit coin 2 and all the other crazy ones coming out. These guys don't know what they're messing with and they seem insane. So let's just let them ruin their own planet. So that's kind of what I'm thinking. But who knows? I could be wrong, but that's my take on that one. I'm sticking to it, Tina. Thanks for the question. And then last, but certainly not least, we have Mark. Mark's coming out of Denver. He says, Hank, with Trump, Biden, and basically every politician pretending to care about crypto now, do you think we'll ever see a world where campaign donations are just straight up NFTs of their worst takes? That one I can see happening. I mean, we're already kind of seeing what I believe is the next evolution of campaign finance, which we saw with Trump coin, right? It's people buying into a presidential or a political candidate, funding or seemingly to fund their rise or continued rise to prominence and a way of supporting them. So, and I would really love a Trump disaster like worst takes NFT, because whether you like him or not, he's hilarious. Maybe the unintentional comedian of our time. And I would really get some good aha, ha-ha factor out of that. But I don't know if I'm ready to see or to promote political people with NFTs and whatnot. But I do think it's very possible. So we'll see. Am I excited about it? Not really. But that seems to be the way the world is going, gang. So thank you for all your questions on today's Audience Buzz. If you have questions of your own and you want to get some answers from them, make sure to hit us up on Roxham TV, on our X account, or Hank at Roxham TV. Also, we are on Instagram, all the places you can go. So make sure to write us in. We love hearing from you. And thank you, everyone, for their questions today. And until our next Audience Buzz, we'll see you then. What? Oh no, guys, it's not a Trump alert. It's a scam alert this time. This is the part where I need you to gather around, because today's scam alert is brought to you by the fine art of financial deception, pig butchering scams. You'll want to hear about this one so you don't become a casualty yourself. Because if you thought regular scams were bad, imagine getting emotionally slow cooked before getting financially slaughtered. It's not a good look. But yeah, that's the business model here. Because according to Cyvers, these scammers raked in a casual $5.5 billion this last year. That's 200,000 victims willingly handing over their crypto to professional manipulators who pretended to care more than your last situationship ever did. Whew, that one felt really personal. Now, here's how it works. You think you're making a savvy investment, or worse, falling in love with your soulmate on WhatsApp. But behind that stock photo profile pic is a scammer with a PhD in gaslighting you. They groom you, they build trust, then bam, your crypto wallet's gone faster than you can say, I should have stuck with index funds. The numbers are frankly staggering. 75% of victims lost half or more of their net worth. Men aged 30 to 49 were the prime targets, because nothing screams midlife crisis like wiring all of your Bitcoin to someone named Sophia from Singapore. I feel attacked by my own joke. Now, some victims were groomed for months before getting drained, and that's a long con, folks. These scammers are more patient than that overpriced therapist that you're probably seeing. And here's the real kicker. AI is making it worse. Generative AI and chatbots mean scammers don't even have to put in the emotional labor anymore. Now they can just ghost you and steal your money at scale. Efficiency, right? Right. But it's not just retail investors getting wrecked. It's centralized exchanges, crypto-friendly banks, and even institutional traders are bleeding cash from these scams. Regulators are finally waking up, though. But let's be honest, they're moving at government speed, which means we'll get a solution sometimes around never. Final thought, December 2024 set a new record with $468 million stolen in just 1 month, making it the biggest pig roast of all time. So if some investor slides into your DMs with a guaranteed opportunity, do yourself a favor, block them, report them, and then move on with your life. Stay sharp out there, gang. And remember, if it looks too good to be true, it's probably a pig butchering scam in disguise.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
All right, folks, it's that time again where we take the 5 biggest stories of the day, slap a label on them, and decide if today was a victory lap, a faceplant, or just an absolute circus. Let's recap. First, Trump maybe, but not really, endorses XRP Ripple. Well, whether intentional or not, Trump dropping XRP-related posts on Truth Social had Ripple fans foaming at the mouth. Throw in the fact that Ripple's CEO dined at Mar-a-Lago and might land on Trump's crypto advisory team, and yeah, that's a solid bullish for XRP. So even if the market didn't go parabolic, regulatory clarity might finally be on the menu. But that's bullish for everybody, so I'm feeling bullish on that story. Number 2, the Libra Meme Coin disaster, where $251 disappeared faster than your latest Tinder date. That one's feeling bearish to me, gang. I mean, what happens when a meme coin backed by a sitting president gets pumped to the moon and then nosedives 90%? Chaos, lawsuits, impeachment threats. Argentina is now watching its leaders squirm while investors clutch their empty bags. Now, if this doesn't scream bearish, I don't know what does. Next up, Bitcoin's stable price action. Is it suspicious or is it a new sign of strength in a maturing market? Well, Bitcoin is beginning to behave like a responsible adult, hovering between 94K and 100K as of late. And that's kind of weird. The king of volatility suddenly decides to kind of play it cool. Either way, we're gearing up for a major move, or this is just an eerie calm before the storm. Until then, as much as I want to say it's bullish, I'm slapping this with a BS label for now because we need some more info before we designate anything accordingly. Next, OpenSea's C token airdrop drama. Again, NFT traders hope for free money, but OpenSea's XP system turned into a wash trading paradise of sorts, forcing them to reset everything. Now, people are a little confused, very angry, and unsure if the airdrop will even be worth it. Now, if you need an entire rule book just to understand your free tokens, this feels like a lot of BS to me then. It's BS. And lastly, we have the SEC's new crypto enforcement unit, C2. This new division, it's got a new name, but it seems like the same old crackdown. The SEC isn't giving up on crypto lawsuits, they're just rebranding. More lawsuits, more investigations, and still no real regulatory clarity. At this point, there'll be less of a watchdog and more of a wrecking ball, which to me, this screams bearish, no question. So our final score, we got 1 bullish story, 2 bearish, and 2 BS, which means today's verdict, we're leaning, unfortunately, a little bearish on the day, folks. Between the Libra implosion and the SEC's never-ending crypto crackdown, it's looking a little rough out there. But hey, at least Trump's keeping things interesting and Bitcoin hasn't had a meltdown yet. But either way, that's a wrap for today's show, boys and girls. That's it for the Blockchain Report. If you laughed, if you learned something, or at least mildly smirked, do me a favor. Like, follow, and subscribe to Roxham TV and Hank at Roxham TV on all platforms so that you never, ever, ever miss an episode. Because crypto never sleeps, and neither do the scammers, politicians, and tech bros trying to control it. We'll be back tomorrow to sort through the madness once again. And until then, stay smart, stay skeptical, and for the love of the blockchain, don't send your crypto to strangers on Telegram groups, gang. See you tomorrow, and as always, hodl on.